This is Jerry here at Wealth Dynamics. Thank you so much for tuning in. This is our Friday night wealth creation course live from the studio. And we are hitting you on Facebook, Instagram, YouTube, all over the place, all over the world. We appreciate you tuning in. So if this is your first time joining us, I teach a course every single Friday. And I've done this for, Mike, how long have we done these for? Like 2 years, 3 years?
2 years.
2 years,
Yeah.
2 years now, teaching every single Friday on finances. Okay, and the reason being is I grew up really not knowing much about money and wanting to know more, and no one ever really told me. And when I started to learn, I learned from the wrong people, and it turned out the information they gave me didn't work because they didn't know. So I had to go all the way back to the drawing board, and it was frustrating. I had to figure out what is real when it comes to money, what actually works, who should I actually be listening to, and you know, where's this data at? Because it's not just out there in the open. Right. I remember in 11th grade, a teacher of mine showed me the rule of 72, which just calculates how quickly money doubles. And that was my first little taste of like real financial education. No one ever talked to me about it before that. My parents were bad with money. And when I saw that, like the first spark, because it showed like $2,000 a year. And if it compounds over and over and over, then that 2,000 would turn into a millionaire by that time that person was like 40 or 50. That was the first time I saw that. It clicked, and I was like, man, if I found $2,000 and for however long and did this, I would have that money. But that was it. And after that, like I didn't get other data, I didn't get other education. So the purpose of these courses is to give it to you frequently so that you really get an understanding of how money works, right? So we're talking tonight, should I hire a financial advisor? Okay, now to give you some context, if you've been watching ever since the first week of January, we covered setting goals for 2020. The week after that, we covered what are the top financial concerns Americans have. And ever since then, I've been talking about the mistakes. Okay, the mistakes I made with money. Well-intentioned mistakes, because I would be like, New Year's, right? New Year's resolutions, I'm going to get my money right. And then the first things that I would think about is, okay, well, let me start up a 401k, put some money in for retirement, pay off my debt, plan for my kids' college. This is one of those mistakes. Hiring a financial advisor. And I'm going to preface this by telling you my answer here already off the bat is no. You probably shouldn't hire a financial advisor. But I want to explain my point. Now, you need to know this. I used to be a financial advisor. I was very, very good at it. Okay. And so I'm looking at this from the context of what I know on the other side of the curtain, being in that industry, selling those products, working in those areas, to tell you that, hey, as a consumer, this is not something that's good for you. It's not something you should be doing. All right, so here are some of the facts. First things first, we need to understand what is a financial advisor. Now, without using the definition, anyone in the room, like what's your impression when you hear financial advisor? What does that mean to you? What do you guys think that would be defined as?
Somebody that would help me grow my wealth.
Somebody that helped me, Jeremy, grow his wealth. Mike, what about you?
Basically, someone who knows a little bit more about money than I do.
Okay. Do you guys want to know what mine was? Like when I got into it, the reason I got into it, it was like the prestigious, like, you know, I'm the wealth guy. Like Jeremy said, I'm the wealth guy. It's kind of like this mystique atmosphere that you have around being a financial advisor. You think about all these buildings and suits and all that stuff. So that was what I envisioned. And that was me getting into it. Okay. So the real definition of a financial advisor is a person who is employed to provide financial services or guidance to clients. Okay, a person who is employed to provide financial services or guidance to clients. Jeremy, how close was that to what your definition was? Okay, Mike?
Not close at all.
Not close at all. So person who is employed to provide financial services or guidance to clients. All right, we've got to look at this. It says person who is employed. What does employed mean?
They work for somebody else.
They work for someone. Okay. They work for someone to provide financial services. Do they work for me, the client, to provide those services? No, I don't sell services. So if they're employed, they're not employed for me. Who are they employed for? Who are they employed by? Financial institutions. In this case, mostly going to be Wall Street. They are employed to provide financial services. That means Wall Street hired them to sell their crap. That's all it is. Now, the other part is guidance. The guidance, very vague term, right? Guidance, I'm kind of pushing someone along and moving them along a certain pathway towards that end. A financial advisor doesn't provide guidance for no reason. It's guidance towards you having the realization, me having the realization, oh, I should give my money to this thing or this guy or put it here, right? So a financial advisor, if we simplify this down, a financial advisor is a salesperson who works for Wall Street to sell Wall Street's products and services. That's all it is. Now, I want to share with you, being in the industry, I'm going to actually give you kind of the really quick overview of the business model, so you can really understand what I had to understand about this. So there's a couple of different layers to the financial industry. Okay, at the very bottom, you have consumers. Consumers being clients, right? So if I'm sitting down to hire a financial advisor, I'm the consumer. Okay, right above that, you have the financial advisor. All right, and I want us to really remove like the prestige and the emotional attachment and just think about like, just positionally, we think about an organization. Okay, when I go to McDonald's, who has direct contact with me one-on-one as the customer? Who is that usually in McDonald's?
The food advisor.
The food advisor, the guy at the drive-thru, the guy at the front window. He's placing my order, right? If I go to a retail store, who is the first point of contact that's directly communicating with me? The purse advisor, the person trying to tell me which purse I should buy, right? If I go to a restaurant, who is directly in contact with me? The waiter, the guy telling me which food I should buy. The food advisor. So the financial advisor is the money product salesperson. That's all they are. Above them, typically the layer above them, you might have management, right? Depending on if they're an independent agent. That's all kind of just like off to the side. Organizationally above them is what's called a broker. Okay, a broker is, this might be also known as a broker dealer or an RIA. There's all sorts of nerd terms. I want to go ahead and let you guys know, I'm going to oversimplify things tonight for the sake of you understanding it. But if any financial advisors are watching, they're going to be furious that I'm not acknowledging their terminology and all of the acronyms they use. We're just going to call that a broker dealer. This guy hires this guy to sell stuff to this guy. That's all it is. Okay. Now the broker dealer works with agencies, insurers, funds, and these guys own products and services. If a company owns products and services, they can't make money without distribution, right? They have to find a way to get the products and services into the hands of the consumer. So let's say I'm a fund company. Let's say that I'm a fund company and I'm based out of New York. If I have my office in New York, what is the likelihood that all my clients are going to fly to New York to come invest with me? 0. What is the likelihood that they're going to send me money in New York when they've never spoken to me? 0. They're not going to. Now, over social media, that's more of a reality, but you got to think this was back in the 1930s, 40s, 50s, like before social media, right? Like, so if we were to relate this to loans, Jeremy's a loan officer, there has to be a face. They're not going to just be like, oh yeah, here's like, let me give you all of my financials. The person needs to have a person they meet with that sits down with them. They're one-on-one. So these guys need distribution. Otherwise, they can't move their financial products and services. They need a company that specializes in distribution, AKA the broker dealer. The broker dealer has a network of financial advisors employed by them, and those financial advisors will sell whatever the broker dealer tells them they can, should, and are allowed to sell. Okay? And so that's how this works. When you sit down with a financial advisor, that is a salesperson that works for a distribution source for Wall Street. That's it. So there's not like, and the way that we perceive it is that it's a certified financial planner or it's a registered investment advisor. And it's this really dressed up, lots of titles. And the reason why is they really don't want you to think they're just salesperson. Okay, a financial advisor really doesn't want you to call them a salesperson. They're going to make it look like they're not. They want to feel like they're a doctor or a lawyer. Okay, and we're going to check out the differences in education level just so we can kind of figure out, should we compare them to that category? Okay, but that's all they are, is their distribution, and their distribution for Wall Street. So that's what a financial advisor is simplified. Now they're advising people. So advise means to offer an opinion or recommendation as wise or prudent. When I read that definition, I actually got the chills a little bit, because that's how financial advisors communicate. They make you feel like you're making a wise or prudent decision. It's never a hard-nosed approach. They just lightly make you feel like this is what sophisticated people do, and if you don't, it's probably not wise and prudent, and you need to be thinking about your future. That's how a financial advisor is going to communicate to me. So advise to offer an opinion or a recommendation as wise or prudent. Now, what's an opinion based off of?
Your point of view.
My point of view. So if my point of view makes me money when I sell this thing, what is my viewpoint? What is my opinion probably going to be? Buy this thing. And I'm going to tell you whatever recommendation, being wise and prudent, that I need to for you to buy that thing, because that's my viewpoint. That's my opinion. Now, the other thing is, if we look at it just financially, financial opinion, if I'm going to take a financial opinion from somebody, should I take it from them because of their title, or should I take it from them because they're good at money? Probably the second one. Financial advisor doesn't mean they're good at money. Okay, that's actually, there's no qualifying test before you become a financial advisor to actually measure, are you in a good financial condition? Are you actually smart with money? I could literally be broke and become a financial advisor and get a license. I would be able to tell you I'm a financial advisor. Okay, the reason I know how and why is because that's what I did. I was a broke young kid as a financial advisor going around with the license advising people. Okay, it's not cool, and it's not something that actually is prudent and wise. Why would I take money advice from somebody that can't pay their bills? Why would I take money advice from somebody that doesn't have money in the bank? Why would I take money advice from somebody who's not doing any of the things that I want to do? I wouldn't. So I have to look at advice. Where do I get that from? And then the other thing to look at too, financial advisors have only been around since the 1960s and 70s. Before that, they were just called brokers. Okay, a broker is more accurate because, again, if we look at our distribution model, they are brokering financial products and services. They didn't like the term broker because it sounded like a salesperson. Okay, anyone in the room ever met, Jeremy probably knows this, Mike, you've probably seen it too, I know Lexi has, real estate agents that tell their clients they're consultants? I'm a real estate consultant.
Yeah.
I'm a real estate advisor. No, you're not, bro. You sell real estate. You're going to do the same exact, you're a broker. Just like if I sell mutual funds, I'm not a financial advisor. I'm a mutual fund broker. Why would I want to hide that? Why would I want to mask that unless there's something I'm secretly ashamed of that I don't want you to know? Okay. So the financial advisor has no requirement to prove they're solvent. They have no requirement to prove that they're financially wise or even have successfully built wealth themselves. So there's a couple tests a financial advisor will take. Okay, to become a financial advisor, I would need to either take the Series 6 or Series 63, and also maybe the Series 65, or I take the Series 7 and the Series 66. Those are the main ones. Those are basically exams that the government makes the advisor take in order to be able to say, I'm a financial advisor. These exams cover nothing about how to build wealth. All it is how financial products and services work. How does a bond work? How does a stock work? How does a mutual fund work? What is a PE ratio? What are options? What are calls? What are puts? Okay, I want you to think all the way back to think Rockefeller, way back then. Do you think he knew how a mutual fund works? No, they didn't have them. They weren't a thing back then. They didn't come around until the 1920s. Okay, so what I'm pointing out here is that the stuff that I learned, I'm telling you, I actually took the tests, passed them, very good scores. I took the test. The stuff that I learned has no direct application whatsoever to me knowing how to help you build wealth. Okay, it's me memorizing information about how financial products and services work and then regurgitating that information back to you. Meanwhile, you think as a consumer, you think that I'm wise because you don't understand the words I use, because I sound complex and complicated and sophisticated, right? Really, I don't know what those things mean either. To this day, I can tell you all of the technical definitions of what a share of stock is, but literally, I can't tell you what it is. I don't know. It's an invisible thing. You know what I mean? But I can tell you all the right answers. But those right answers dress it up to be more than it actually is. And then finally, financial advisors, they cost their investors 20 to 30% of their overall investment gains. Okay, and we can go over math on this tonight, but when you total up the fees and all the commissions and everything an investor pays, if they did not pay those fees and commissions, that investor would make 20 to 30% more on their money. Okay, at this point, it's not even a conversation of are they qualified, it's a conversation of is it worth it? Should I actually pay that much in fees? So here are some of the myths. I want to bust some of the myths right out of the gate. I was sitting down today, I was thinking about what are the myths that I thought, as an advisor, before I was an advisor, because at some point I looked up to these people enough that I wanted to be one, right? And so I had to look at what are the myths. So the first myth is that financial advisors are smart with money. Okay, smart with money. I remember sitting in a car with a financial advisor that worked at Edward Jones and hearing him say that he had no idea how to do a budget. That his wife takes care of all of that because he just can't, it's one of those things where he's like, yeah, if I just do it, I'll mess it up worse. Like the excuse people give when they don't want to do the dishes. Oh, you don't want me to do it. I'll just mess it up worse. That was him with the budget, except he was serious. He's like, oh yeah, I know I can do all the investing stuff, but when it comes to budgeting, my wife does that. Okay, and I was probably at the time 21, 22 years old. And I remember sitting there in my head, and this time I was still a financial advisor, but I was thinking, so you're going to help invest, but you don't know addition and subtraction? Because that's all a budget is adding things together and then subtracting what you spent. And then the difference is what you have left over. And that's a budget. You don't know that. Okay. Financial advisors are not smart with money. You'd be amazed that if you looked at, there's something called a Form U4. So if anyone ever wants to creep on their financial advisor, you can go to the FINRA website and you can pull up their U4, which is their background check with FINRA. And it'll tell you they've been through credit counseling or they've had bankruptcies, or they've had these criminal incidents on their track record. Okay, so I remember one time I was sitting down and one of my managers, both of them actually, I just for fun, I just learned about the U4 thing, figured out both of them had 6-figure credit card debt and they had to go through debt settlement programs. And they're telling people what to do with their money. Can you believe that? They're advising and they're not even saying, I could understand if they were saying, I'm in debt. Here's my story. Watch how I'm going to get out of it. I'm sharing this with you, but they didn't even want people to know about that. That was top secret information, right? So just because it's a financial advisor doesn't mean they're smart with money. The other myth is that I need to use one. There's kind of this urge, I have to have one. I've got to hire a financial advisor. It's the smart thing to do. I just want to pose the question, why? Why? Okay, and we're going to answer that question later, but think for yourself, why would I need to use a financial advisor? If they've only existed for the last 40 or 50 years, how is it that as a necessity in 2020, I need one when for the first almost 2,000 years of the BC era, they didn't exist? How did they suddenly become a necessity? I don't need one. They weren't even around prior to that. Okay, so then it comes down to, well, then I want one. Why would I want one? So I've got to look at what are my wants and needs and what would a financial advisor do to help me accomplish those. The wealthy have used them. That's another myth. The wealthy people use them. Again, the wealthiest people don't use financial advisors. The wealthy people are their own financial advisor. The top 1% in this country don't outsource their wealth to other people. They understand markets. They understand their investments. They understand their businesses. So for some chump, Warren Buffett says that Wall Street is the only place where a guy in a Rolls Royce will take advice from a guy who drives in the subway. For some chump to come off the subway and try and advise a billionaire, and the billionaire knew that, he's going to laugh at him and be like, you have nothing you can share with me. So it's not a need. The wealthy have never used them. The other myth is that financial advisors will help me understand money better. Okay, this is generally not true as well. They're not going to help you understand money better. They're going to help you understand financial products and services better. That's not money. That's a different thing. That's a mechanism. Okay, if we go back to, again, our distribution model, these guys up here, okay, again, these are our product. We'll call this the orientation point. This is where it came from. This is where the product emanated from as an idea. These guys actually sat around a boardroom with their CEOs and their board, and they thought of what are the financial products we could sell that would be most profitable for our company that the market would want the most. No different than any other company would do for product development. They didn't sit around and think about how do we make the best investments in the world? Okay, these guys were like, how do we make products that we can easily push on people? They'll buy them, they'll want them, it's easy to market, and we make a ton of money when we sell them so that we can get wealthy, because that's the goal. That's business. We have to really unravel like the vanilla, like, oh, it's all like it's unbiased and everything, you know, there's nobody trying to make money, and like, it's not this fairy tale world. These guys are selling the product to you to make money. These guys are hiring these guys to make money. These guys are sending the products to these guys to make money, and the products are made up in the first place to make money. Okay, do you want to know what's really crazy? I'm going to point this out to you real quick. Remember, you guys remember 2008? So I had a client text me yesterday, Jeremy texted me, he's like, what is a subpar mortgage bond? Because he's starting to read through The Big Short, right? So I break it down. I'm like, subpar mortgage bond. Broke guy that should not get a mortgage somehow qualified for a mortgage. Okay, the bank that sold him that mortgage doesn't want the loan on their books, so they sell it to someone else. Okay, that someone else sells it to Wall Street. Wall Street sells it to you. Okay, if that guy stops paying, that is what I own. That's actually what happened in 2008. So this product doesn't even need to be a good quality product. It can be a turd. Like, it can literally be like Billy Bob with 3 teeth, no job, somehow qualified for a loan, and the bank sold it and they sold it and they sold it until finally my portfolio bought it. That's what I have. I don't know that because I'm not a fund analyst. So I don't go through this, and I'm not going to be like, oh yeah, I need to make sure I stay away from that because that's a toxic mortgage loan. Like that, like by the time I actually got to the page where it shows that holding, I would have so many misunderstood words. I'll be passed out on the desk. I'll just be exhausted from trying to figure out what all this stuff means. Okay, so we have to really go back to, they're not going to try and help me understand money better. They're trying to help me understand their products and services better. The other myth, the financial advisor knows how to invest. They don't know how to invest. They know how to buy and sell financial products and services. My financial advisor is free / low cost. Guys, free is the worst. In the financial industry, when something is free, it means that there's a bunch of money that you don't know about that's coming out of your pocket somewhere. That's what free means. Like, think about, like, why would it be free? We were talking about HELOCs, the free HELOCs. They're not free. Like, they might pay for a lot of stuff to get you in the door, but if they paid that much money to get you in the door, like, I guarantee you're going to be dinner that night. It's not free. So the fees on a financial advisor, they're either going to get paid on a flat fee. Okay, this is usually, this model is only for high net worth people. The advisor would be like, hey, I cost $50,000 for the year on retainer, and a wealthy person would pay them that. Or they're going to be fee based, where they charge a percentage of your portfolio, or they're going to be commission based, where they get paid every time you put money into it, and that money comes directly out of your pocket to go to them. That's how a financial advisor gets paid. That's not free. Okay, free doesn't necessarily mean that because I didn't physically pull out money out of my pocket today, that it didn't cost me something. Usually the times that I don't physically pull the money out of my pocket today, it's going to cost me more in the long run. It would have been cheaper had I just pulled the money out of my pocket and paid up today. Now, the other one that I want to hit here is that the best place to find a financial advisor is from a reputable firm, or ask my friends and family. Okay, that's usually the conclusion most of us come to, right? Either I'm going to find like New York Life or Edward Jones or the companies that I know about, or I'm going to ask my friends and family. Okay, I'm going to go ahead and point out the companies that you know about are usually the worst. Why? Like, think about how much money do they spend for you to know about them? That's how badly they're willing to pay. They're paying for you to know about them because they want your business that bad. They know how much money they'll make if they get you as a client. Okay, the referral thing. If your friends and family are not wealthy, I would not trust a damn referral they sent me on a financial advisor. Why would I take like, let's say this was personal training. If all of my friends were overweight, why would I work with their personal trainer? You see what I mean? Like, that makes no sense. So I'm going to work with a firm that I've researched, who actually produces results in the area that I'm trying to succeed at. Or if I'm getting a referral, I'm going to go talk to one of my friends that's actually winning with money and be like, hey, bro, who do you use? Okay, you're apparently you're an accredited investor, you're a millionaire, you're whatever. Who do you use? And I guarantee you that they don't use the New York Life and the Edward Jones and the one that you see on every single corner. That's like getting your taxes done at H&R Block. Like, come on, guys. We already know, don't get your taxes done at H&R. That's a bad place to get your taxes done. But they're everywhere. The reason they're everywhere is they know their product can suck. It's like Starbucks. They don't make good coffee. They have a really quick experience, and the branding is cool, and they're everywhere, but they don't make good coffee. If you want good coffee, you don't go to Starbucks. You go to somewhere that makes good coffee. One of the best coffee places I know has the crappiest looking coffee shop. Okay, you would never go there unless someone told you, hey, I know it looks nasty there, but this is good stuff. Right? That's what you're looking for with a financial advisor. Either I'm looking for a firm that has a reputation of producing what I'm looking for, or I'm talking to somebody who's winning in that area and finding out who they use. And I want to backtrack again really quick. I'm going to go ahead and pick on this one real quick. If you're looking for a financial advisor and you're basing it off of they go to church with me, or they're on my kids' PTA team, or our kids play soccer together, I want to have, like, if I'm having that conclusion, I should hire this person to help me build wealth, like Jeremy said, because our kids play soccer together. Mike, where's the logic in that I've tied together? I'm going to hire this guy to help me with my wealth because our kids play soccer together.
There's no logic. You're just trying to do it because you guys know each other.
And there's no logic. Or I'm going to hire this guy to help me with my wealth because we go to the same church. Like, there's no connection there. That's cool, but it's not like I would hire somebody that has a totally different religious belief if they can help me get more money in my portfolio, if they can help me grow my investments. I would hire someone that doesn't have kids if they could help me get my investments higher. It doesn't matter. So I need to look at what's the stat they're producing. Going to the right church is not the stat. Kids playing soccer together is not the right stat. Being on the PTA board is not the right stat. Unless you're trying to hire them to help you go to church, play soccer, or be on the PTA board, they're not going to be able to actually do that based on the fact that you hired them because of that. It's the wrong thing to look for. Okay, so here's, again, perception and reality. Perception is what I think is happening. Reality is what's actually happening. So I think I'm hiring a financial expert. That's that's a good intention. So I don't want to make anyone wrong for wanting financial help. That's what I think I'm doing. But I'm telling you, being in that industry, what I'm really doing is I'm actually hiring a licensed financial product salesperson. Okay, not an expert. I think that my advisor knows more than me about money. The reality is most financial advisors struggle with money just like me, and they know very little. They're also paycheck to paycheck. Okay, think about just the results. Right now, America, from a financial standpoint, we're not in a good position. If I'm an average American, I've got over 15 grand in credit card debt. I've got about 130 grand in total debt, paycheck to paycheck. My debt to income ratio is 40%. I'm going to run out of money after 10 years in retirement. I've got less than $1,000 in the bank. Based on the stat, these advisors aren't doing their job. Right? If we had this giant field of people and all they did was dedicate their lives to helping people be better with money, don't you think our country would be better with money? So the stats aren't showing up, which means that these guys are part of the stat. They're in it. They're also paycheck to paycheck. They also have student loans. They also have all of this stuff going on. I think I'm going to get financially educated. So I'm like, man, I'm going to hire this person. They're going to teach me about money. Really, what's going to happen is I'm going to sit down with them and get confused. Okay, my eyes are going to glaze over because they're going to start talking about market capitalization, and they're going to talk about diversifying, and they're going to talk about different risk factors, and they're going to talk about all of these different indexes and numbers and factors and stuff that I've never heard, that were all made up by people who perpetuate that into the industry to help sell it. And none of it actually means anything. The advisors can't even tell me what this stuff means, but because they studied it and they can regurgitate the definition, they can confidently say it to me, and I'm going to be able to actually understand it. Like that's going to happen. I'm actually just going to get confused. I'm not going to get educated. I'm going to actually become uneducated. It's going to become more complicated, more complex. And then I'm going to hand my money over to him because I'm like, oh, I don't understand this stuff. Apparently this guy's smarter than I am. I'm going to let him do it. Okay, Mike, what did you say? You said you had a guy on the call today or this week that actually kind of tried to do that, right? With the sacred, and he's like, okay, all right, you guys got it.
Yes. So basically, he didn't want me to make sure he fully understood. He was like, well, I'm basically just paying you guys to do it for me. They do the work for me.
Yeah.
And I was like, this is not how it works.
Yeah. So what Mike is saying, he had a guy, he signed up this week for the sacred account. Mike gets on the call And Mike educates every single one of our clients on how the sacred account works. And when we say educate, Mike makes you draw a picture. If you can't draw a picture, then you don't know the sacred account. And if you don't know the sacred account, Mike's not going to leave you alone until you can draw the picture, right? This guy couldn't draw the picture, right? So he's telling Mike, well, I don't need to know this. You need to. Again, he was confused. So Mike, instead of being like, oh, that's okay, I'm your guy, I'm going to take over, Mike stopped and said, hey, we can't move forward until you understand this. Let's go back to step one, and I'm going to simplify this even more, right? So that's the opposite. In the industry, you're actually being confused. You're not able to draw the picture. You're not able to note it out like that. I'm thinking this is a responsible move. I'm hiring a financial advisor. I'm being responsible. I'm doing the right things. My parents had one. My peers have one. Everyone says it's a good idea. I'm literally giving away my responsibility, though. In reality, if I hire someone and tell them, take my money from me, you're supposed to do it for me, I'm not being responsible. Okay, I'm not. So I need to look at this as, if I'm going to be responsible, it actually means that I take more control of my money, not give up control of my money. And then finally, my advisor doesn't charge very much. My advisor's fees will cost me almost a third of my investment growth. And then the last one, my perception is that my advisor came highly recommended. The reality is that they did the same thing to my friends. They seemed nice on the surface, and they just asked for referrals. They didn't come highly recommended. They haven't made your friends rich. They were just really socially nice, and they went to the same church, and their kids played soccer together, and they're like, the nice thing to do would be to introduce them. They haven't produced a stat or a product for your friends that referred them to you. All right, so let's break this down. Why would I need financial advice? The root of hiring an advisor is because I feel like I need help, right? I would be like, man, I need financial advice. I need help. I need someone to build my wealth. Why would that be? First, I don't know what I'm doing with my money. That would be the root reason. The only time I need help is when I don't know what I'm doing, right? So if I'm hiring one, what I'm really saying is there's something about money that I don't know. We can all agree on that. Secondly, I'm not currently getting educated on how to know what I'm doing with my money. So I'm saying I don't know, and I'm also saying I haven't been doing anything to fix it. Again, there's that lack of responsibility. Then I seek to give up control because it helps me get this thing handled without actually trying to learn and figure it out. So why would I need a financial advisor? There's something about money that I don't know. It's backed up by the fact that I'm not trying to fix it. So we have to ask if it's because there's something I don't know about money. If that's the root, then the solution is that if I could gain the knowledge about money, the problem would be solved, right? So if I don't know something about money, then we have to pose the question, well, if I hire a financial advisor, are they going to help fix that? Are they going to help educate me so that I do know something about money? Here's what's going to happen. I'll be educated maybe on the basics of money. Okay, they're going to tell me financial truisms. They're going to say, you know, Lexi, spend less than you make. Make sure that you pay off all your bad debt, save money for a rainy day, invest for the future. Like how many financial commercials and brochures have you seen that had almost those exact phrases on them? I told you guys, I was freaking good at this. All of the general, they sound really nice, right? Penny saved is a penny earned. Like all the stuff that you hear and you're like, yeah, grandma would say that. Like that's how they try and market to you. What would Mike's grandma say? And we'll just say that in a very prestigious way, and Mike will do business with us, right? So you're going to get very basic, if anything. But the thing is that that's not education. If somebody says spend less than I make, and I haven't been doing that, there's something I don't understand about that statement. And just telling me that I should do that isn't fixing that. Right? I had a call this morning with a client. He's about to get on with us on a sacred account. We're going to pay off debt. And he said, I don't know how much money is left over at the end of the month. My response was, that's a problem because I'm about to get you set up on an account that's going to pull a certain amount of money out of your account every month, no matter what. It's very important that we understand how much is there. So we didn't do the deal today. We're actually going to sit down and do his budget first because he needs to understand and I need to understand and he needs to be educated. Right? So you're not getting really educated. You're kind of just having phrases that sound nice reinforced back to you. The second thing, will a financial advisor educate me? I will be educated on how financial products work, which can be cool. But let me ask you this. If I'm having trouble paying my bills and saving money, how is understanding the mechanics of a mutual fund going to help? Okay, if I'm worried about running out of money in retirement, how is understanding what a load versus a no load fund how is that going to help me do that? Right? If I'm trying to build passive income now so that I can incrementally stop trading my time for money, how is understanding the way a 401k works going to help me? Okay, we were just talking about this. It sounds really cool. It's true information. It's very technical in that specific situation, but it's not applicable to me. It's a pitch. It doesn't do anything for me, right? So I'll be educated on how financial products work, unless I want to become a financial product or sell a financial product or own a financial product, then this doesn't actually mean anything to me. I'll also be educated on why I should buy the financial product. Okay, so they're going to tell me what it is and then why I should buy it. That's not education, though. That doesn't help me in my life today. Okay, and then finally, I won't be educated on how to win with my money. A financial advisor is not going to sit down and say, here's how you improve your situation today. They're going to say, here's how you make sure you have enough money in retirement in this retirement account so that based on this mathematical calculation that's completely made up, and at the bottom of the disclosure statement, it says that it has no yield on future performance, but based on that number, that I'm going to be okay when I'm 60. That's what they're going to educate me on. All of it's made up. I would run, there's something called a hypothetical report, right? So what's the first thing when you guys talk to a financial advisor, if you heard them, they say past performance does not guarantee results, right? Doesn't indicate future. So that's like the thing. We know that's the thing, right? So we're not allowed to guarantee results on past performance. Yet when I sold a mutual fund, I would pull up a hypothetical. Guess what we used for the hypothetical numbers? Past performance. Here's what the fund did over the last 20 years. We'd say, oh, it's done 10%. And then you'd be like, oh, it's done 10%. In the bottom, there's literally an asterisk that says past performance does not guarantee future results, meaning all of these numbers are completely invalid. Okay, the even worse one, there's something out there right now called indexed universal life insurance. They used a hypothetical. The product didn't exist during the time of the hypothetical. Okay, so they're looking back. They're saying, well, the S&P did 88% or 8% over the last 30 years. And if you had this in there this entire time, the problem is the product they're selling has only been around for 5 years. So we can't rightfully say, oh, if the product existed 30 years ago and if it was in this market that it would have done this, but that's what they're saying. You guys see the out point there? That's illogical. So you won't be educated on that. You're going to be actually looking at all of this other stuff, which is all justifications on why you should buy financial products. It's not going to improve my life today. So options to get educated. If I really wanted financial education, because remember, we said, if I'm going to hire a financial advisor, it's because I don't know something about money and I need help. Education would solve that problem. Financial products won't solve that problem. So if I really want to get financially educated, and this is my personal viewpoint, this is what I have done. The number one way to do that is read books by old dead guys and girls. Seriously, like look, Johnny Rockefeller died super wealthy. That means that we know he made money, kept it all to the end of his life and passed it down to future generations. I need to study that guy. Okay, Andrew Carnegie, a little bit different. He made just as much money as John Rockefeller, but his, and this is where I love like sharing this story. His wish was that by the time he died, that he would give away all of his money. He did. Okay, so if I want to learn that and learn about how do I accumulate wealth and then bless those around me, I'm going to study Andrew Carnegie, right? Who am I probably not going to study? I'm probably not going to study Dave Ramsey. Okay, on his track record, he's already gone bankrupt. Like I've already seen that he's made mistakes financially. I haven't seen the finish of that guy's story yet, so I'm probably not going to study him. Okay, Warren Buffett, he's got a couple years left, right? So I could study Warren. Like there's not a very big chance Warren loses it all in the next 3 years of his life, but you guys know what I mean. Like you have to study people where you know, all right, this guy, he's successful long term. So I'm going to read books by authors who either have money or had money, or I'm going to read, this is the other one, and this is where I fall in. I'm going to read about authors who studied those who have or had money. So this would be like an autobiography versus a biography. I can have a book that the guy wrote himself, really good, or if he didn't write it himself, I can look at who researched this guy. How do I study their content? Because that's the next best thing, right? So when I'm reading and someone is saying, hey, here's my new idea based on this stuff, no one's ever tested it before, let's try it. That's not probably who I want to follow. If you notice, when I talk about finances, never once do I quote myself and say, this is me. I always point back to, these are the old dead people we're following. They're historically the top 1%. This is what they've done. I've studied them for the last 10 years of my life. This is all that they do. All of the stuff they've done that's been around for 150, 200 years as well. We're doing that. We're not doing, we didn't do Bitcoin. We didn't do like all of this random, I don't do cannabis oil. Like that's not stuff I'm into because it's not been around. These guys didn't do it. The successful people didn't do it. Jeff Bezos, there is a chance Jeff Bezos loses everything before he dies. Okay, it could happen. Those of us that are like, man, Bezos is killing it. Check this out. Since their beginning, their inception, Amazon has paid out about 30 billion in total earnings. Apple did that last quarter. 2 different company models going on there. Do I want cash flow or do I want an inflated number that's based on nothing? Okay, so you don't ever see me post about Bezos because I'm looking at that's net worth. What about the guy's cash flow? What about the guy's actual assets, right? So I need to be studying that. I can study biographies and autobiographies of wealthy people. One of the first times I did this was a book called Titan, the biography of John Rockefeller. And I learned that guy was a freaking stud. Like he was a killer with numbers. His very first job was accounting. Okay, he had like a world-renowned balance sheet that he would actually keep on him. When he went on a date, he would actually, like when he paid for the soda or whatever, that he would actually write down in his ledger. He'd pull out his notebook and write down in his ledger on the spot how much he just spent. Okay, there's a story where he when they were doing their packaging, where they package up kerosene and all their different oil products, and he found out that he was watching the production lines and he saw this guy soldering one of the barrels together. The guy was putting 30 dabs of solder on it. And he said, hey, drop that down one and see what happens. So he did. He's like, cool, now drop it down another one and see what happens. Well, he did it again and it started leaking. So Rockefeller figured out if we have 28 dabs of solder, the barrels leak. If we have 29, they don't. We used to do 30, drop all of the production lines down to 29. Think about how big Standard Oil was. In my mind, that's a minuscule, like that's tiny. In his mind, that's like probably millions of dollars a year because he has so much production going on. That's a guy I want to study, right? So I'm looking at biographies. I'm also taking courses created by these people, okay? Now the course thing is newer. Not a lot of people back in the old days had financial courses. So if you're looking at courses, I'm again back at square one. It's either got to be somebody that recently made those, that is wealthy, they're old enough to be like considered they're not going to lose it all, or somebody that created the course who studied them, right? And then the other one is I can observe money for myself. This is a big one. If you can observe money for yourself, I can look at what is money doing. Not what do people tell me it's doing, not what do I see, happening in my buddy's 401k. If I just start looking and observing the markets, I start seeing like the stabilities. I start identifying things. I start seeing like this pattern and that pattern, that doesn't work. And I can start learning about things, but I actually have to study it and watch. I can hire somebody to tutor me on money. Okay, again, hire somebody that actually knows, not a professor that's broke. Big difference. And then realize that none of these options involve the financial advisor. None of them did. So if I'm looking for a financial education, none of the options involve me sitting down with a financial advisor to pay them for their advice. So why would I hire a financial advisor? The obvious answer, if I really wanted them to make a paycheck, I would hire them. That was the only thing I cared about was, man, let's say Mike was a financial advisor and I was like, I really like Mike. I want to pay Mike money. I'm going to hire him and buy one of his things. That's a reason I would hire a financial advisor. Or if I specifically wanted to buy one of their services. Mike's mutual funds, and I want mutual funds. So I'm going to go to Mike's mutual funds and buy a mutual fund. I'm not going to call Mike a financial advisor. I would call him the guy who sells me my mutual funds. That's an honorable transaction. If I did want a mutual fund and Mike provided them at a good price, I would do business with them. That's how business is done. Those are the only reasons, though. I would only go to them if I wanted the products they sold or if I just wanted them to make money for no reason. I wouldn't go to them for advice. I wouldn't go to them for financial education. I wouldn't go to them to give up responsibility on my finances. I would go to them because I knew they sold term insurance and I wanted term insurance and I wanted to buy it from them. Or, man, I just want to do business with you to do business with you. I don't care what the hell you sell me. I hope you get paid well on it. Now, I would beg to say most people wouldn't do that. Most people aren't going to just be like, hey, let me pay this guy for no reason. And I'll also bet that most people don't actually know enough about the financial product to specifically want that from somebody. Okay, so what would happen if I hired one? Here's the breakdown. And I'm going to tell you this from how I experienced it, sitting on the side of the desk, being the financial advisor. And also now being like the anti-financial advisor, seeing all of the other guys in the industry and the way they do it. Okay, so here's what's going to happen. Let's say I hire a financial advisor today. I'm going to sit down with them. I'm going to be asked a bunch of irrelevant questions about my family and my life that I learned from a rapport building course that I took with my sales managers. It's probably going to be Zig Ziglar or Tom Hopkins or I forget the other guy's name. There's like 3 or 4 main people, Bill Cates. Those are my main guys. Okay, I'm going to learn stuff about how to make people like me and how to appear trustworthy and likable. So I'm going to ask you questions based on that. They're not real questions. I don't actually care about your son's name. That's just what I was told to ask you so that we feel like we're buddies. Then I'm going to have you show me all of your financial statements. Okay, I'm going to look through your numbers. I'm going to look through your 401ks. I'm hoping I can see something I can put into a variable annuity. That'd be dope. I make a lot of commission if I did that. And then I'm going to have you take a risk tolerance assessment. Okay, so if I'm sitting there with you, I'm going to be like, hey, we need to measure your risk tolerance. The reason why is because if I have you take a risk tolerance assessment, I can automatically prove to you that your current investments don't match that. Therefore, you feel like you need to move your money over to me instead. Catch my drift? So I'm going to take a risk tolerance assessment so that I can tell you which products to own through the use of words that I don't know, meaning if I'm the consumer, the advisor is using words that I don't understand. Okay, so if I'm the advisor, I'm going to use words that I know you don't know. I'm going to use really big words that are only in existence to describe financial products, meaning nobody ever interacts with them or uses them in real life. Okay, I'm also going to give you a bunch of charts and facts that don't mean anything to you, that you don't understand, but it makes me look really smart. And then I'm going to give you a lengthy presentation and you'll end up surrendering and buying my product because you're that confused. That's pretty much how it's going to go down. Has anyone ever bought from a financial advisor before in the room? Mike, you did? Kind of feel like that?
I mean, he didn't really go into it, but we did all the steps, like steps 1, 2, 3, 4 there.
Okay. Did you buy anything from them?
I couldn't.
Mike didn't. So he didn't get in for the kill. It didn't happen yet. Okay. So at this point, I'll become a Wall Street customer and I'll have no idea what I actually have. Who here has owned stuff on Wall Street and you're like, yeah, I know what it's called. I don't know what's in it though. I don't know. That's most people. And then finally, I'm going to meet with them quarterly, semi-annually, or annually, where they can read me what my statement says and then confuse me some more with big words. Never explaining how I can improve my financial situation. I realized this outpoint when I was in the industry. I sat down and I was like, man, I just helped this person roll over their 401k, but they just told me that they can't pay their bills next week. And that didn't change. But I rolled their 401k over. So when they're 60, it's going to be tight. Hopefully they can make it that long financially though, because right now it's not tight. And then they're going to ask me for referrals because that's how they met me. And that's how they're going to meet my friends and family. Okay, that's what will happen if I hire a financial advisor. So why is Wealth Dynamics different? I want to go over this next. If you're watching this right now, you're like, all right, well, what are you? And how do you do this? And what is that? And how does that look different? First of all, we sell no Wall Street products. Remember how we said employed, a financial advisor is employed? We're not employed by anybody. Okay, I can't tell you how many carriers we have done business with, and as soon as they didn't do what we needed them to do, we dropped them. Didn't work anymore. Okay, we're not employed. We don't sell any Wall Street products. We actually educate our clients. We have them read books. We have them do training. We have them take courses. Okay, so we don't sit down and just go through like, what's your cat's name and where did you meet your wife? Like, we'll figure that stuff out later. Let's get you skilled up on money. Okay, so we actually we have a top train contest. We actually track stats to make sure our clients train on a regular basis and get educated. We simplify money and unconfuse our clients. So my goal when I sit down with somebody is for them to realize money is simple and for them to be unconfused. Therefore, if I tell them a bunch of stuff they don't understand and money seems more complex and they seem more confused, I didn't do my job. Okay. The next thing is that we're going to build a comprehensive financial blueprint to show our clients how to achieve their financial goals. We don't use the word retirement. We don't use the word diversify. We don't use any of that. We look at where are you at? Where do you want to be at? When do we want that to happen? And what do we need to do to start getting there? And then we start getting you there. Super simple. We don't meet to meet. Okay, we meet for strategy, education, and accountability. That's the only times we meet. Okay, we don't call you up like and be like, hey, Jeremy, your statement came in. Let me read to you that it says 6%. Like that's not a conversation Jeremy and I need to have. We're going to talk about, Jeremy, what's the strategy? Or maybe there's something Jeremy wants to learn about. We're going to sit down and educate. Or maybe there's some accountability we need to put in. We're going to do that. Those are the only reasons we meet with clients. And then we don't try any sly sales and rapport garbage. Okay. If I'm trying to sell something, I'm going to tell you, I think this is a good idea. Here's what it costs. We should do this. Here's why. It's not going to be like, oh, by the way, like we should, and then I try and sneak something in on the back end, or make you feel really like you're my buddy. And then on the back end, be like, hey, let's get this done. Like, that's not how it works. This is this stuff here. And I hate how people do this in this industry. Contractors, anyone ever hired a contractor? And they're like, here's the bid. And then they do all the work. And then they're like, oh, actually, here's the bid. And then they just kind of hope that you don't say anything, but you're going to say something, right? We don't even do that. I hate it when people do that. Okay. So that's garbage. So if we help and we can help, we're going to tell you, and then we're going to ask for your business, and it's going to be very upfront, and it's going to be very like, here's the price. Here's what we're asking you to do. Here's why it's a good idea. Do you think it's a good idea? If you say no, we're not going to be like, oh, well, we can't work with you anymore. If you say yes, let's go ahead and do it. So here's how we can help. First thing, we would build a blueprint for you. If I'm sitting here looking at, well, I do need financial help. Okay, maybe I'm watching this tonight and I was like, I was about to hire a financial advisor, or worse, I just did. How can we help? Let's build a blueprint first. It's hard to know what I should do if I don't know where I am, right? So a blueprint tells me here's where I am. So now I can understand that, and I can start to base my goals off of that. And I can base what I need to know on how am I going to achieve those goals, and do I have that data? It's a very logical process. Then we're going to simplify your finances. We're going to make it easier for you to operate with your money. We're going to make budgeting easier. Okay, we're going to make saving money easier. We're going to make investing easier. We're going to take all this stuff that's very high level, because it's not. We're going to make it easy, because it should be easy. And when it's not easy, there's always a lie involved. Next is we're going to identify, where are you losing money? We have an acronym called DITI, debt, insurance, taxes, and investments. We're going to go after those 4 areas. We're going to help you reduce the amount of money that goes out so that you have more money left over, and then you're going to put that money to work. So then we go into, how do we use this money better? If we're paying off debt, if we're investing, all of those things. That's the sequence we're going to go through. Then we're going to help you build wealth now. Okay, it doesn't need to happen when I'm 60. It doesn't need to happen when I'm 70. It happens now. I had a client come in today and she's like, hey, should I defer my Social Security till I'm 70? And I was like, what do you think? It's going to be insolvent. Let's do it now. Build wealth today while it's there. And then lastly, at the very bottom, you can't see this, is kind of cut off. If we do offer products and services, they're always because they're going to enhance your plan, and you're going to logically see that. And if you don't, like, you don't have to do it. That's the beauty in it. And if it doesn't make sense, you don't have to do it. And if it's not simple, you don't have to do it. But we're tired. I'm tired of people going to the financial industry for help, leaving confused and perplexed, and then just doing it anyways and trusting it was the right idea, and then finding out on the back end it's not. The reason why is I'm the guy that cleans up after that. Okay, so here's the action steps. First, get educated. I need to learn more about money from the right people. Again, the right people, not the wrong people, not my peers, not my financial advisor, not my New York Life agent, not the Edward Jones guy, the right people. The ones that actually know about money, the ones that have money. Next, I need to get a blueprint. So I need to organize and simplify my money. Third, I need to stop losing it. I need to tighten up and economize and maximize what I'm keeping. And then finally, I need to save and invest to maximize cash flow and passive income. Those are my action steps. And I give you action steps every week with the hopes that you'll implement them. If you do this, your situation will improve. It's going to get better no matter what. Okay. So guys, I want to wrap up here before we end off tonight. If there's any questions, do we have anything online? Do we have anything in the studio tonight?
I mean, you basically answered it at the last 3 slides. He was asking, basically, isn't 12 Dynamics similar to a distribution and sell network, but added education? He's just saying like tongue in cheek. But
yeah, so I think we probably answered that. So we do a lot of education. Anything we sell is for the client. We're also independent. So we don't work for anybody. We're not the Edward Jones guy where I've got to do what Edward Jones says. We're not the New York Life guy where I've got to do what New York Life says. We would look at, what does Patrick need, and which products mathematically will factually enhance Patrick's picture. And then we're going to educate Patrick. And I think you guys just did that today, huh? We're going to educate Patrick on how do I put this thing to work? How do I actually improve my situation? Okay, we even reach into industries we don't have any business being in. Like we're doing mortgages. Like here, that's going to help, right? We've done credit repair, restoration, like things that it might not be in our wheelhouse. We find an expert and we're going to educate you with their stuff too. So it really is like, what do we need done? What tool gets that done? And how do we make that happen for a client? So I hope that answers it. Any other questions we have tonight? Awesome. Well, thank you guys so much for watching. Make sure you like, share, and subscribe. If this helped you, this is the entire purpose, is to help you. If you would like more information, you can keep following my stuff. You can reach out to my team and I. We're happy to help out. Have a great Friday. We'll talk to you soon.